Hey, good evening, everybody. It's Laskus Random Walk Trading. It's Tuesday, May 1st. Month of April's fast come and gone, and Mr. Taxman is taken care of. And now I got about another 3-4 weeks of allergies, so hopefully you don't suffer from allergies. Mine's that pesky little pine pollen. So I just stay inside, but car show season is also kicking off, so I got some car shows to get ready for. So it's going to be a good spring, but I'll take it one day at a time, and I'll take my eye drops and my what am I taking? I'm taking the Allegra. Seems to do the trick. Tried the Claritin stuff. It worked great the first year. Then the year two is like taking baby aspirin. Didn't really do anything. But anywho, interesting day in the markets. A little rebound, which we'll talk about. Um, we'll talk a little bit about our Amazon trade that we closed on Friday, and then we'll look at our review all of our trades and kind of go from there. So let's get our disclaimer out of the way. As you know, Random Walk is not a broker or dealer, nor investment advisor. This presentation is for educational purposes only. We don't know your situation and what level of risk is right for you, as we're not making any specific trade recommendations. The risk of trading options can be substantial, so please be aware of placing any trades in your brokerage platform. Actual P&L can vary and be affected by liquidity, commissions, and slippage. And also power and any kind of animal-related instances. So had a situation in, I think it was like 3 weeks ago. We had a bad thunderstorm and it knocked out power, and it was a good good case of monitoring the what are you going to do in a power failure? You got a laptop, but you need internet connection and all that. So going through that drill, always a good thing. So, and I had my generator running. And of course, after you get all this stuff hooked up, I do have a UPS that goes for about an hour, and that'll get things going. But I got one of those Honda generators. Highly recommend. Very quiet, efficient, and if you can get one on clearance or something, it always helps on the pocketbook. But money well spent. But at least keeps your trading platform up and running. Or you go to a Starbucks or somewhere where it's got power. But if you got an ice or snow or where you can't get out, you need to generate power yourself. Just always have a plan in place for that. So that worked out. I got mobile, and then I also got a generator to keep things cooking there. So again, link updated our trade grid thing. Amazon inked out about 2,000, a little over 21 or almost 2,100 bucks. Our April SPX trade really didn't go anywhere, so we just kept the 625. And this week we got our SPX trade 17D, which we'll talk about, and then our other open positions. Thursday we looked at getting our Google position on, a little bit more longer term play with one of the FANG stocks we talked about Thursday. Got filled on that nicely, and we'll talk more about that as well. Let's see here. So let's first go in. I'm just going to briefly talk about the Amazon trade. We talked about Friday what our battle plan was, and it pretty much went according to schedule. And I was trying to get some screenshots, but on Saturday, but it was too late. You got to get them on Friday before the expiration. But what we did is, as I mentioned on Thursday, and let me just make this bigger so you guys can see it. Let's try going down here. So we basically, I talked about doing this in 3 pieces, or 3 different trade ideas as the Amazon trade went up. One, obviously we're approaching the long strike of the butterfly, and I said, hey, I'm going to sell a chunk, this first chunk, to lock it in that first 15 minutes or so, and because implied volatility will get bled out pretty quickly. And if I could sell that for some premium, I can at least lock in some profit. So that's kind of what we did with step 1. And what do we get with that? We got 335. couple of you emailed me. You said you got like $5, which was a pretty good shot because Amazon kind of just bled down for the rest of the day. But you don't know that in the first 15 minutes. You don't know if it's going to gap up and keep going or it's going to come back and pull back. So we collected some premium by selling that a 10-point spread. That was step one. Now by doing that, obviously by selling a chunk of this butterfly and doing the stack fly, your margin got kicked up. So the next thing was to looking at buying back some of the shorts just for some margin relief. And I originally talked about I think a 20-point or 10-point spread, and I was actually able to get a 20-point spread for $4, or not $4, 4 cents, I'm sorry, times 10. So we spent $40 just to help from a margin standpoint. And so that was the outer leg of this butterfly. So we sold one here on the first leg, get some profit. And then we bought part of the short vertical back for 4 cents times 10, so spent $40. And then we had, the short here, which obviously we wanted expired out in money, but by selling a 10-point and buying back 10 on this side, it gives us some flexibility to sell it a little bit closer. And so that was the third step. And now the balancing act, and this is going to be up to your discretion, is the closer we move it, the more credit you get. But if we get some kind of run up between, we're looking at what beginning of the market and then the rest of the day, you could have more margin, or you can kind of top it off. I kind of went in the middle. So I went a little bit in, but if it did run up, we can make another 2,000 or 3,000, which of course didn't happen. But I sold a 50-point spread for about $2.49. So it gave us, $12.45 credit. So that added to the bank. So net got us close to about $2,100. So $2,075. But hey, we got close. But that was a nice little 7-day trade setup. So that's how that kind of panned out. So this is in the customer hub, and I also posted it in the chat room, so you have it at your disposal. Let's go in. We'll do a quick run up of the markets here, and then we'll look at the SPX and what you guys think, and then we'll adjust our positions accordingly. So S&P looked like it was taking another melt down, and then by midday did a little reversal. But volume was not that impressive, and then ending toward the highs. Same thing with the Russell. Ended up only being at 7 points to the upside for the SPX, 2655 roughly. 8 points to the upside on the Russell. And obviously the NDX rallying pretty heavily. The FANG's getting some love today. They weren't feeling love here for the last week or so, but I think after hours, I don't know what Apple's doing. I think it was kind of a so-so type earnings, and I haven't read all the details yet. But trend-wise, 1.4, so some selling going on. I think it looks some more of a profit-taking type of thing going on. Window dressing, but typically with end of the month and the first 3 days of the month, it's typically bullish in nature. I'm not seeing a whole lot of that, but hey, we got the first signs of it here after lunch. Maybe that'll continue, and the VIX kind of precipitated to the downside, which is to be expected. It's a inverse correlate. As the market goes up, the VIX goes down. And tick wise, pretty bullish, 558, just making a gradual trend to the upside, and hitting 1120 by 3 o'clock. So all 4 cylinders or 8 cylinders in the market were kind of going the upside. I wish there was a little bit more momentum or volume behind it, but we'll kind of take it as it comes. And with that, let's do our SPX. Since I'll do all the SPX trades first. And obviously we're getting some support here at the 200-day. I can blow this up a little bit. So we've come down on the 200-day, kind of bounce back up, and we hit it again, and then we can almost bounced off it again today by lunchtime, but then kind of rallying, closing up on the on the upside, so getting kind of a bullish hammer going on. But still underneath the 50-day moving average. This could be a little bit vexing from the standpoint of get like a descending wedge formation going on. Do something like this, and extend to the right. Let's do a crude triangle, so let me make this a little bit easier to see. Let's do this in red, yellow. I swear I've not been drinking. Let's change. I got a lower trend line in yellow. We'll do blue. I got blue on the upper one. All right, let's do pink. There you go. And let's do the lower one. Same thing. So we kind of got this descending wedge formation here, kind of flat. So we're kind of just bebopping it. And I think if we break one way or another, we're really going to go higher toward the 2872 level. But I think it's going to be the width of the opening of the triangle. So you just take this width and then tack it on to the upside, and likewise we could also go to the downside. But my take would be, we maybe test it, and then we're going to kind of break up to the upside. That's my 2 cents. See what you guys think. Next 30 days for the SPX, do you guys have a target? And if you're bullish or bearish? $2,700. Bullish, yep. $2,775. $2,800 next 2 weeks. Interesting, James. Another 2,800. Yeah, interesting points there. As Sarah saying, that another channel forming. Correct me if I'm wrong, Sarah. Is we've had this on the weekly chart, this blue and yellow line kind of sitting there. We potentially could have another channel kind of forming between the yellow line and this pink line, and the kind of bebopping in here and just kind of meander sideways or eventually higher. But we need a little bit more conviction of the upside at this point. Got to break above that 50-day. So it's going to be interesting because on this what do we got here, 2686. That's the upper part of this upper trend line and also the 50-day moving average. So there's some resistance obviously there that we got to kind of power through. So most of you kind of thinking to the upside, which I kind of would agree with. So let's take a peek at our first position expiring on the 4th, right around the corner, trade 17D. Now we did get filled. I'll take it back. That was the 11th position. So we got this trade going on, and let me kind of just shrink this down. And we got our shaded area plus or minus 1 standard deviation, a 2 standard deviation, looking pretty sweet on the downside. If we had 2570, but stranger things have happened. And then we also got this little butterfly on the upside that's kind of hanging out here, but not really going to be doing anything for us. I mean, it's outside the 1 standard deviation. And I've kind of queued up some potential trade ideas just for time's sake, and my allergies are killing me. I apologize. My eyes just feel like sandpaper every time I blink. But so a couple things. Now, obviously, you can kind of stick with this, and if you stick with the trade, we'll get 475. But we're going to lose this $1,800 because we're losing 331 bucks a day with a few days left. So the theta's hurting us. So one of the things I was kind of looking at is, well, two things. One, we got a short here, the 27.20, 27.30, 10-point spread, which is this guy. It's 15 cents. Let's say we buy it for 10. I'm spending 50 bucks. Gives us that. So we can do something like that. The other thing we can do is is looking at a 132 butterfly. This is a $1.35. Don't want to spend $1.35. But let's say, for example, because now this butterfly will get cheaper, especially if we're open down tomorrow. That'll come down. Plus we got theta. I'm willing to spend, let's say, $1 for it, 35 cents. If we get filled, we will get something like this. We'll get a little butterfly, but I've moved my break even down to the 26.80, about 20 points closer at the money. Now, while this looks very nice and promising, was it 25K? Even with this little baby thing down here, this is still a $10,000 potential win at expiration if we close right at 2,700. So if we get some pinning effect, case thinking 2,700, if we get a pinning effect, you're going to be a happy camper if we get filled on both these trades. So again, just playing with, looking at where the shorts are and try to make the trade closer at the money. Here I'd be spending 50 bucks and $1 if I get filled $1, spending 500 bucks. But the trade-off is basically buying something a little bit closer. No guarantee the S&P is going to hit 2680 or higher. It could keep going down. If it goes down, then I can squeeze this and buy this back and make a smaller butterfly. But I want to see if we get any kind of velocity to the one side or the other, because as we've noted, we got like a sideways wedge going on, and if it breaks out, it could break out big, and either way we'd be happy because it's gonna be in our favor. So that's kind of what I was looking at. So even if you just did, if you didn't want to buy back these shorts, which is fine, you'd have 5K of margin, but by buying that back, you basically eliminate that. So if it goes through it, fine, you're going to lose 75. We will lose 75 bucks. Now we're still negative theta, but we're banking on some kind of movement. You could basically, sell this if you wanted to, but if you buy the shorts back and we do move up, then we could sell, a 5-point spread here, lock in some profits. But that's kind of what I was looking at as far as a potential play. What was the other one I was looking at? This is another one. This is a regular butterfly. It was $1.40. Now here, this is interesting. So a couple different ways to play this. One, this is $1.35. This is $1.40, and this is okay. This is a regular broken wing versus a 132. 5 cents difference. Now, what you'll notice is the first strike here is at 26.75 versus at 26.80. So we're 5 points closer at the money. So our probability standpoint, the second trade is going to be a little bit closer to at the money. Now, two, it kind of split the margin right in half. Since it's not 0, but it's not 5K, but it's 2,700, and your upside break evens at 27.25 roughly. And again, you could be a little bit, if you want to say maybe $1.25, if we get some kind of pullback, and you still got a decent shot to the upside to go that route. If you want to get cheaper, you can move that out, but I would probably do something like that potentially. So there's another way to play it. So if you want to do like a 132, you got 2,000 and margin up above 26.95. If you're not as bullish, you still keep at least 525 because you're spending 50 bucks on the short spread. And if you collect, say, a quarter on the butterfly, you get 550. And if you get under 26.85, and then you've cut that negative theta down to 155, it's another way to play it. So I'll leave it up to you guys. Do you guys like the first one, or do you like the second one? Let me put this in 90. Oops. And I tried this for $1. Yeah, so the first one would be the 132, and option 2 would be the broken wing, which should be 5 points closer at the money, roughly 5 points difference. I'm not going to split hairs, but say $1 for each of them, or for either one of them. So I didn't know, you guys have a preference between the two? Two. Second one. 1, 2, 3. So looks like you guys like the second one, which I would agree. Slightly higher probability trade setup. Still gets some kind of inkling of potential profit. And if you get any kind of pinning, if we get anywhere up in here, we could definitely sell a chunk of this butterfly to lock in some profits. And then we buffer up this middle zone a little bit if we do get some kind of pullback. So let's put this in. I'll put these in as 2 separate trades, 10 cents. Let's see if I did that. Gives that. Yeah, I'll put them in as 2 separate trades. We'll try to get this filled for 10 cents, and then we'll try to get this filled for $1. So let's do. Duplicate. All right. So that kind of cues it up. We can play with the put side, but at this point, I'm not going to play with it just for sake of time. But let me save this. And again, this is 17D as in doggy. All right. Next up is trade number 20D as in dog. Is SPX May 11th, so next Friday. And we did get a fill today. And this guy, we got filled. Let me take this off. So this is the trade that we kind of had set up. This is not filled. So this was a bearish play. And as the market kind of ramped to the downside, we said, hey, we got a short call spread. Let's see if we can buy a 15-point spread. And we got filled today when the market fell down. So we got something like this. And we're kind of right underneath the 10 here. So first things first. So let's look. So this, I'm going to kind of zoom in here just on a little bit here. So there's a 10-point spread, 26.65, 26.55. It's 4.80 right now. So it's still got another $5.20 kind of left in it. Obviously, if we run up, we're going to start losing money on it. My vote is maybe that we sell for $5, take the money and run. Now I do give up. If I sell for $5, I'm giving up 500 or $5 of potential profit. So 2,500 bucks of potential profit goes away, but I've locked it in. And at least get 1650 out of the trade. Or if I bump this to $5, that's what 1750. I get at least 1750 out of the trade with a shot to the upside. So that's probably the first obvious thing, is looking at the in the money spreads. So we're kind of getting some positive theta going on. Got a shot to the downside, and by getting that $1, we kind of get something like this. So that would be my first thing I'd be looking at. So let's kind of cue this up, because if we get the market to keep running up, we're going to lose that $5 or 480. And there's no guarantee. If we get some kind of gap opening, we may not get the $5, but let's take the money and run. Probably should have took that off a little bit earlier, or even looking at a 5-point spread. So that is the first thing I looked at. Now the other thing, now that we got this kind of filled up here, adding a stacked butterfly. So now we kind of got like a call Venus fly. So the call Venus fly has a longer vertical than the short. And that's kind of what we add. So if we do a stacked butterfly, it's twice the number of contracts, and it's going to be, do something like that. And that is currently at a quarter credit. Now we can say, hey, we want, if we get some kind of run up, that quarter credit could be more. I could say maybe 50 cents. And that gets us right about there. And if I get $5, gives us something like that. That gives us 22.50, and almost gets us, we can lose 250 if we get above 27.34. But again, if we start getting into money here, then we can sell some of the contracts to lock in some profit. So that was kind of the battle plan I had with this guy. Let me kind of cue this up. Yeah, so no one's saying this is like bobbing and weaving. Yeah, it's kind of like bobbing and weaving. It's kind of, you're playing a chess game and finding what potential trade setups that you would like to make life a little bit easier for you. So let's go in. And we got the put done. Let's see, we get 50 cents out of this. So at 50 cents credit times 10, we collect $500. So another way to collect a little bit of premium. We got $30 of positive theta. We'll take it. The nice thing is if we do get the run up, that's just going to help increase the price of this butterfly. So let me unlock these. They're not filled. And export. 11th. All right. And again, this one I'm just going to let the put side just kind of hang there for a little bit. If we're still around by next week, we can always move this up, or we can kind of flip it. If we get some kind of run up to the upside, I'll be definitely taking this off and seeing if we can beef this up. Again, for time, I'm just kind of we're talking about the upside, since we're kind of concerned. I don't say concerned, but our prognosis is that we think the S&P is going to go higher. So going to concentrate on looking at the call side on our trades and seeing what we can do to enhance it. Or again, you can also buy back shorts if you want, but it's 2 standard deviations out of money. I'll be looking maybe at a butterfly for potential credit. That would increase the probability of your trade versus out here. I mean, yes, we can, but just my 2 cents. How much is this? How much is this short spread? Yeah, I'll queue it up for you. You get my curiosity up as well. And it's by vertical. And James, I know what you're going to ask, so it's all good. Yes, I'll point that out. Yep. Okay, so we got 25, whoops, 25.50. And we got 25.30. It's a 20-point spread. And that's normally what most people are going to be doing. But I know you guys are smarter than that. It's $1.10 right now. And these are, how much we got? We have, must have 10 of these. There you go. So that's, you know, obviously you can buy just a portion of that back and get it back above zero. The other thing is we get some kind of run up, and with 10 days left, the other thing I'll be looking at, instead of buying that one, is buying or monitoring, I should say, this guy. Now it says 325. If we get a huge run up, obviously that'll get cheaper. There are also 10 contracts, so keep in mind that, you know, you're gonna, you know, you want to get it, you know, at least $1. I mean, even at $1, you'd be spending $1,000. 50 cents might be more interesting, but just buying back the shorts at this point makes the butterfly maybe a better alternative. But just for the sake of example, I'll say 50 cents. That's $500 you'd be spending. By buying that back, that gives you a bigger. Yeah, we got 5 and 10. That's why it's kind of skewed a little bit. But you can see it gives you a very nice. It gives you a wider put spread. So 2600 to 2650 with a little bend in the knee, so to speak, at 2575. Get you a lot more bang for the buck. You know, you can, what's 39K versus a straight, you know, 13K. So you can see now what I'm doing, because normally you'd be looking at this, which is fine, is this is a short as well. So I'm looking, this is a short vertical in essence. If I buy that back, I'm gaining all this roadway, so to speak. So you're going from a 2-lane highway to a 4-lane or even an 8-way or 8-lane highway by buying this back, and you're just undoing the kink in this put condor. But again, you may want to monitor both, or have a butterfly, but I'll leave that to you as a homework assignment. And then with that, and you think we're going to turn bearish, then hey, you got a nice little mini black ops type trade setup that you can do. But I will save that as well. 11th. All right. The next up is trade 21D. It's May 18th, so another week further out of the money. And this is the one that we did with the iron cockroach and added a put broken wing. And we got filled on the put broken wing first, then we got filled on the iron cockroach, and we're sitting right up here. But again, we got a few weeks, 20 days left in the trade. So we got a short spread here. And again, I kind of got this on the call side. $4.35, not the most attractive at this point. So you can, this is looking, let's see, this would be, and that's a stacked butterfly. So stacked is the twice as many contracts as the original fly. And let's see here, even if I pull that wing down, James, say it's still at 410 and you're at 10K margin, you need some kind of massive move to the downside. Even at $1, I'd be a little bit leery. I could do it. You'd have $800 that you can lose here because you're injecting $1,000 of capital. When I start getting into the stacked flies, I really like 50 cents or less versus the regular $1 because it's more capital. So so for this guy, we got you. And doing this regular butterfly, we do someone down outside here. It's 2 standard deviations. Whoops, sorry. Thank you, Sarah. There we go. So you see we got a butterfly that we're fast approaching. We got the 2700. We got the 1 standard deviation covered. And again, we got 2630, 2600, 2570, which is down in here. It's 2570. Oh, 2600. Okay, this 255 is to put on the inside. My apologies. So, and if we go back, that could be enticing for some of you, which is not half bad. I mean, again, it just depends on what you think the underline's going to do. Now, if we continue to run up, we're at $1.05. I could easily probably get this for 75 cents, and net, you know, at 75 cents, you know, a little over $400, and I could lose 175 now. But still, you get a higher probability trade if you're expecting some kind of pullback, but you're injecting some risk on the downside. $7,600, quite a bit of potential risk. If we're to do some kind of butterfly on the outside, let's do 2530 and 2500. And let's pull him down. That's not half bad, and this is $1.95. And again, stack butterfly times 2. That's $2,000 you're putting in there. So don't let this line deceive you. That's minus 1750. If we get some kind of massive run up, you know, again, 50 cents or less, it's $500 for 50 cents. I'll take that trade. And get $5,300 in risk down below 2,500. Net lose $300 here and have an opportunity there. Yep, that would be an interesting play. But I think for right now, we're just kind of wait it out and see which way the market's going to go, up or down, and go from there. I'll save this one as well. This is trade 21D. All right, so that one is our last SPX. Now Thursday we'll do a new SPX because Thursday, instead of doing another weekly, we did a longer term in Google. So let's look at him next. That's trade 23B. And we kind of lucked out on this guy. The market went down, then went back up, and we got filled for the prices that we talked about on Thursday night. You know, we're aggressive with the puts. We got the 350 that we wanted because the Google moved down just enough to get filled, and by moving down, it reduced the cost of the butterfly, and we got $2. So net, we got the trade on for $400 credit. Again, we did 4 contracts on the put and 5 on the calls, just to help reduce some of the downside risk. So we got $3,600 of risk down here. Now, we had some talk in the discussion about, you know, Google's in the lower part of the channel. I'll pull up a chart here in a second. There's the plus or minus 1 standard deviation. And let me do a 2 standard deviation on the upside. There's the 2 standard deviation. We had some good discussion in the chat room about where we think Google could be. It's hovering on the 200-day, fighting its way back. It's in a lower channel, bouncing off the 50-day on the the 10-week on the weekly chart, and potential rise to the upside. Now, one of the things I wish I had a little bit more conviction was, the volume was a little bit anemic, but it seemed, Google seems to be having some support here at this 2025 or 1025 level. If we get some kind of major move to the upside, great, but could we continue to fall down? Sure. But this weekly chart, it's consolidating. But looking at the up volume versus down volume, a lot of it was just pure buying today. You can see that the the sell volume was pretty low compared to the up volume. So with that, a couple things. We talked about a stacked fly, and so we got one here on the call side. So here, I mean, this is already a pretty nice trade. It's outside the 1 standard deviation, 2 standard deviations up here. I got it at 40 cents, 25 cents. You might talk me into it. So that's 250 bucks that we'd spend, right? If we get filled at 25 cents, we get some kind of nice little thing like this, and about 48.50 risk on the upside. I do like that for a quarter. If you really want to get it and you want to spend the 40 cents, the 400 bucks that you got to put the trade on for free, you'd be back to even. So here you'd be even monies and upside of 20, 35-ish. But if you get out for 25 cents, you still got a $1.50 credit on, and you got a nice little profit window on the upside. So I thought we'd do that guy, seeing if we get filled. And I'll put this in at after the first hour tomorrow. Yeah, and this is not a 132. It's a regular butterfly, not a 132. So you should have no problems getting filled in a regular butterfly. All right, so that takes care of the calls. And the put sidewise, we kind of could play with that if you'd like, because obviously we continue to sink to the downside. Now, as Sarah mentioned last week, was that we only did 4 contracts. Just in this scenario, if Google continued to fall, we can sell one more contract. So let's kind of just simulate that for a second. And it's some of that premium's bled out to 225, but obviously if we continue to roll to the downside, we can get another 350 or even more on it because it's a 10-point spread. If it really gets down here, we can sell that one. We'll say $8. That gives us one contract to play with. It gets about 950, and we still have 4,000 of risk. But if we get above 998, we'd be in decent shape. But we're not going to be on hopium. That's a dangerous drug to be hoping about. What I was looking at is potentially this short spread transforming into a butterfly. And if I do the 960, 980, 1,000 put broken wing out of 132, I get something like that. So I'm going to zoom in here, take him off. So break even's right at about $1,000. That's right where the short strike is. This butterfly's $1.45, maybe for $1. Again, I might buy it for $1. I'll spend 400 bucks. And again, if I buy it for $1, remember we collected a little bit of premium to put the trade on. And net, that gets me back to 0, but the break even, I've moved from 1,000 down to 970. I bought me 30 points to play with. Now, if we continue to run down, now we could still sell another vertical. It's 1,000 if we get, putting $8 in there. So that gives us something like that. Now, this short that I'm putting in is at the original strike, not what I did here with the butterfly. So we may want to reevaluate that if we continue to move down. But that's one way to kind of look at it with the put side, but one step first. So that's what do you guys think on the put side? Do you guys want to leave the put side alone, or do you want to see if we can get this in for $1 and give us a little bit of a buffer, move the break even 30 points lower, and you do get a little profit zone. We do get a little bit of a profit zone. It's not much, but hey, it's profit's profit. Not guaranteed it'll be landing in there, but we're about 4,000 of risk if we get filled at $1. versus 3,600. So we are adding $400 of risk to the downside. So you guys like the butterfly, or you want to wait? Butterfly, butterfly, butterfly. 2x butterfly. I knew you'd say that, James. All right. So I talked you guys into it. So let's create duplicates. And I'll do the same thing with this. I'm gonna wait an hour. If you get it before then, good for you. So that puts it in. And I will unlock that as well. So we kind of got a game plan for that guy. And this is 23 B's and boy. Got plenty of time with this bad boy. Yeah, June 15th. So it runs up great because that butterfly will get really, really, really cheap, and we should get no problem getting $1 if we get some kind of run up in Google. In the last trade that we got, open trade, is the Russell trade. And this is trade 19 B's and boy. So a few weeks ago, we talked about adding a butterfly to create a condor, which we got. We're up a little bit of money, and the break even, oops, this is a May 25th expiration. So we got risk down below 1,500, which is 50 points away. From a chart perspective, what do you guys think with Mr. Russell or Mrs. Russell? It's been kind of going sideways here, which is unusual. It's been, well, I'd say sideways, but it's had some nice swings, but it seems to be zeroing in right here. Again, almost like an ascending wedge formation that we're looking at in the S&P, almost getting the same exact kind of setup in the Russell. Let's do this in pink. And we do the same thing, similar. It's not exact, but patterns typically are never exact, but they do happen more frequently than you think. Yeah, it's probably not the best. Let me just redraw that one. Stand to the right. There you go. Because the S&P, we had like a little wedge thing going on. We got the same thing happening in the Russell. And I think either one way or another, it's going to break high to the upside or to the downside. By the amount, you go by the mouth of the triangle. So the distance, what we got here, and I'm just ballparking here, so let's say 1610 to 1439 or 1440. So 1610. That's what 170 points. It's 170 points that we can get a swing either way, to the upside or downside. Just a rough estimate, but with that, and then Ivy is shrank quite nicely at 15%. So that's why we aren't seeing a whole lot of, I mean, look, I got some potential trades in here, but nothing really looks that attractive. IV rank is pretty low, so we're getting back to, we're scraping the bottom of the bucket. There might be some other potential trades. My vote's just to kind of leave it as is right now. If we sit here, we lose 210 bucks. But if we're gonna get some kind of move, we'll have something to the upside or something to the downside. If we move to the upside, then we can take a look at removing something on the downside. The downside was a butterfly. This is an 80-cent butterfly. Cuts a little bit of risk off, not a whole lot. We got 52.10 down below 1500. Adding this put broken wing for 80 cents. Yeah, maybe for 40 cents. He might twist my arm. I might go for it. And that's 2,900. Quarter most likely, but got to be realistic sometimes. But I'll be watching. It's on my radar to be on the watch list side. But I think I'll just kind of keep an eye on this one. So that's all the open trades we got. Thursday, like I said, we'll look at new SPX weekly. We'll see what we get filled between now and Thursday with our positions. And I'm going to rinse my eyes out and put my cold compress on and get my eyes so I can see, because what happens is after a long day, sometimes they'll actually swell shut if I stay outside too long. But I'm not at that stage, but I know my limits. So with that, like I said, if you have any questions, shoot me an email. Otherwise, I'll post any trade updates in the chat room, and if you get the SMS text, you'll see those as well. But other than that, have a good couple days, and we'll talk to you guys on Thursday. Thanks.